Just Capital and Forbes publishing their third annual list of the Just 100 companies. That list ranks how the largest publicly traded companies perform on issues such as worker pay, board diversity, and environmental impact. This morning, Just Capital and PayPal, which ranks number 8 on the list, are hosting their first ever quarterly Just conference call. It allows investors and the public to ask CEOs about important non-financial metrics. And joining us right now with the host of that call, Paul Tudor Jones is here, co-founder and chairman of Just Capital. He's also, of course, the founder and chief investment officer of Tudor Investment Corporation, which has close to $8 billion in assets under management. Also the founder of Robinhood, we should say. And Dan Schulman is here, the CEO of PayPal. Gentlemen, we want to talk about all of this. But before we do that, I want to just get everybody's sense of where the markets are going, given the potential risks like impeachment, which we have on the table, and also what you think Jay Powell is going to be saying or not saying. So I'm going to go to you, Paul, first on that, and then I want to talk to you about Just Capital. Where are we in terms of what you think Jay Powell may or may not do, and how does the impeachment factor into this for you?
I think there are 3 things broadly kind of driving the markets are. First is, and I think more of a secular, we've got a secular deal is we've got a 5% budget deficit coupled with the lowest real rates that you can imagine with the economy at full employment. So that's the most unorthodox and potentially explosive combination that you can imagine. It's like the photo negative of 1930 when we had the last trade war, but you had tight fiscal and tight monetary policy. Now we got the exact opposite. So that's one. The second thing that you have going on is you have the presidential race, where the outcomes give you such dramatically different economic policy. So that's huge, because if you have to have a view on who the next president's going to be, to have a view on where the economy is going to go and where rates in particular are going to go, as well as the stock market also. And then I think if you take the final thing is we've got this trade war. We had the deconstruction of 50 years of interconnectivity globally, economically, financially, et cetera. So when we began to dismember that because of economic nationalism, it was offset by a 150 basis point drop in 2-year notes. And the markets have voted, and the ease that we got in interest rates has obviously outweighed the fiscal contraction that came from the $60 to $100 billion of tariffs that have been imposed. So those 3 things at any one time are what are driving the market narrative every day. But I think the most important thing to understand is we've got an explosive combination of monetary policy and fiscal policy right now.
Explosive on the upside.
On the upside.
Okay, but can we just unpack the other 2 issues real quick?
Sure. Your
bet for who is going to be then in office in November, because that sounds like a huge component of how you think the market may move one way or the other.
I'm completely mystified as to who the next president's going to be.
But therefore you do what about it as a trader?
It's really, really hard. This reminds me a lot of Brexit, trading Brexit. There was so much uncertainty in Brexit. I've never seen so much intellectual capital devoted to one thing in my life as Brexit. When you think about it, the markets did relatively little in the UK during that whole time. God, we talked about it every day. The markets did very little. I could see that kind of standoff happening in the markets going forward until we get some kind of resolution on who the next president's going to be.
And does the impeachment piece matter?
I think it does, because the impeachment is going to directly weigh on the probability of the president being reelected or not. So to the extent that it either helps or hurts him, yeah, it's going to be very impactful.
The only problem.
Do you think
that whether it helps or hurts?
Do you think that a Democrat winning, though, just so we're 100% clear, is damaging to the market?
Do I think it's? I think the stock market will definitely decline, because that will assume that it's going to be accompanied by a raise in taxes. So, yes, it will decline somewhat. I don't know necessarily where the economy is going to contract. We'll have to see what happens.
Depends on the Democrat, too.
It also depends on the Democrat.
No question.
Okay, final unpacking of this piece. You're talking about the trade war. How do you think it plays itself out? and how do you trade that?
I think you end up with 25% on $250 billion. I think that's what Ambassador Lighthizer wants. I think that's what the president wants. It gives them the lever going forward to continue to make China accountable on a variety of issues that are so important to them. And I think, what does that work out to? $62 billion in tariffs? I think particularly given where monetary policy is right now, which is extraordinarily stimulative, I think that's nothing.
So it's basically status quo.
Probably.
Have you figured out, you talk about that it's a negative image of the 1930s. Have you had to reevaluate the way you think about the entire interest rate complex globally? And you know, we're this stimulative and rates are still this low. I mean, it's different 10 years ago. Would you have believed it if someone described the current?
I think, you know, the only thing that really bothers me is when we don't talk about this 5% budget deficit. Mm-hmm. For instance, at the last Fed meeting, the media gives the chairman a pass when he says there are no bubbles out there. And if you look on a variety of metrics, you can argue they're not. But we've got an enormous budget deficit.
Where are the bond vigilantes? Where are they?
Seriously, that's the bubble.
But where are they?
Well,
why doesn't anyone else, why don't people put their money where their mouth is in terms of that bubble?
I think the president has done a brilliant job at selling, and he's won in the salesmanship, that budget deficits don't matter because the Republican Party doesn't any longer, is not the party of fiscal conservatism anymore. So in that sense, he's done a brilliant job. Do I think that's the right prescriptive policy? Well, let's see, in 30 years would have at the current rate would have a national debt of 200%.
And you're not even talking about unfunded liabilities like Medicare.
So I'm
and
just
Social
saying.
Security. But the rest of the world is on board
Yeah.
with these rates. It's not just Trump. I mean, everybody's at zero.
Yeah. So I think
Why?
that's well, and one of the reasons why is because our Federal Reserve, for whatever reason, which you would think would be the entity that should be talking. I mean, if we're going to think about the Fed as the kind of Yoda of the financial world.
Oh, I like this.
Where is the discussion?
For the Disney launch?
Where is the discussion about fiscal policy when we have 50-year lows in unemployment? Where is that discussion? Why do you give them a pass at every single Fed meeting? Why shouldn't that be the first question?
All I can hear now is Yoda's voice. Mine, mine, mine. Fighting with R2-D2.
So you don't think you've missed anything that explains all this, whether it's productivity or technology or innovation or globalism?
Clearly, look.
Because you would not have stayed long bonds for the last. And why did gold hit 2,000 years ago and it hasn't even seen those levels since with all this cheap money? That would not have been something you'd think either. We should be at $5,000 an ounce by now.
Well, if and when we bring the federal budget deficit and we mean revert it back to something that's sustainable, my guess is it'll be accompanied by a dramatic drop in interest rates, and gold will absolutely rocket.
I want to bring Dan Schulman into this conversation, and then I want to talk about Just Capital, because that's the reason you guys are here. But to the extent that the trade war, the election, and interest rates matter to your business, to the consumer, and how people are buying or not using PayPal, and you sort of have your pulse on a lot of things that are going on. What's your take on all of this?
Well, I've never been particularly great at predicting the ups and downs of the stock market. They're cyclical, and trying to predict when it'll go up or down, I think, is a fool's errand.
Are you feeling it or seeing any of these issues play into your own business?
Yeah, so I think in general what we're seeing is in the U.S., consumer spend is still strong.
Right.
I know people are predicting a recession for some time, but we're not seeing it in any of our numbers. There's some of these macro events that Paul mentioned, whether it be Brexit, U.S.-China trade tensions, the impeachment process, the election going on right now. But those can break any one of a number of different ways. So from our perspective, we see some pretty strong secular growth, obviously in digitization. Everything's digitizing. So for us, we're relatively bullish over at least the short term.
That's my question, too. You're in such a fast-growing arena. You're going to see growth no matter what. Do you have any way of extrapolating what that means for the American consumer, or is it just too hard to do because you're in such a fast-growth industry?
Well, we have almost 300 million people on our platform right now, so it's a pretty extensive view of what the average consumer
I just feel like
is
more
looking
of my
at.
purchases are online and using
More and more
PayPal.
of commerce is moving online. More and more of our monetary system is digitizing. So those are very strong secular tailwinds for companies like PayPal. So we would see more growth, but we would look at spend relative to other periods. And at least right now, over the next year or so, we're pretty bullish about, in general, the economy.
I want to pivot the conversation to Just Capital because you guys just announced the new top 100 companies using the metrics, which I want to talk about these metrics. As we said, Dan's company is number 8 on the list, but there is a new list out. Microsoft's, that we should say, at the top of that list. What changed in terms of how the metrics played out? Because you do a poll, which is how you measure and judge these companies.
Every year, we poll the American public, and we ask them what are the metrics that are most important to them to determine a company's justness. And they've been, I think, fairly static. We've been doing this for 5 years. We polled close to 100,000 Americans. And the number one single most important component or area is around workers. That's 34% of our rankings are around workers.
And it's been, workers has been the top?
Always.
Always.
Always. So fair pay,
okay,
living wage, those are the top 2. Interestingly, the great story about what the American public believes in justness is that if you look at the top 100 companies, of which Dan's company is number 7, if you just listen to what the American public says, the ROE of the top 100 on average is 6.5% higher than the rest of the 1,000 that we rank. So focusing on workers, focusing on paying a living wage, paying a fair wage, benefits, making a socially beneficial product at a reasonable quality, a reasonable price, treating your customers like kings and queens. That's actually 60% of the whole equation. So it's really a good formula for business. And those companies that do that, that follow the will of the American public,
you argue they outperform.
They absolutely smoke them on ROE, the rest of the companies. And then their stock price, our top 500 out of the 1,000 companies we rank have, I think, in the last 2.5 years outperformed in stock price the bottom 500 by about 5 or 6%. So there's a great story that the pie gets bigger by focusing on stakeholder metrics.
But Dan, here's the question for you. And by the way, he upgraded you from number 8 to number 7. So good luck.
Excuse me, my mistake.
But the question you get asked lots of questions by analysts every quarter about your earnings, what's going to happen next. How often do people say how much you're paying your workers?
How often do analysts ask that?
That's my question for you. How often does the investor class ask you any questions about the things that he is just talking about here?
I think ESG is starting to rise in importance in general. But do I ever get a question on how much do we pay our workers? I would say pretty much never. But I will say this, Andrew, this shouldn't come as a surprise.
No, I was going to say it's common sense.
What Paul is saying, right? I mean, if you ever aspire to be a great company, the number one asset that every company has is its employees. Right. And if they're inspired and passionate, they're going to serve customers better.
And then your customers will be happy and want to come back to you.
And the customers be happy.
And I'm wondering how much of this has already been done. I mean, we didn't just start having just companies in 2019. We had some damn good companies before the turn of the century, as far as I can remember. They weren't all unjust prior to that. So you talk about 1,000 companies. What are there quintiles? What does the bottom 20%, the most unjust companies. Are there really unjust companies?
Uber.
Okay.
I wanted to ask you about this.
Is that
Uber
one of them?
is in the bottom 10%.
Can't this be the more just instead of just the just versus unjust? Aren't all are there really egregious bad actors in the bottom 20%?
Well, I've always thought of our rankings as a competition for goodness.
Well, are there? Okay, did it really need to be done though? There's really bad actors that are unjust companies that are still succeeding.
And if all our goal is to put the rankings out there in accordance with what the American public says.
Right.
So we don't editorialize. At Just Capital, we're nothing more than journalists, just like you are. What we do is highlight where the things that the American public think are important can be added to society. And so Dan, while we're in the green room, went through with me what they did 2 weeks ago. Oh, my Lord. If every CEO did what PayPal did 2 weeks ago, I can promise you that so many of the social issues that we're dealing with today would be solved if we could get companies to refocus the way that Dan has. Just one metaphor. Ever since I was a kid, I used to always shoot my shotgun with one eye closed like this. And then when I was 50, the shooting instructor said to me, "You're going to shoot a lot better if you open both eyes." And I said, "I'm 50 years old. Hell, I can't change. I've been shooting that way my entire life." It took me a week, but as soon as I started, after shooting with both eyes open, my trap and skeet scores went up by about 20% by opening both eyes. That's where we're going. And the new way.
Did he just lose you completely with the shooting stuff, Andrew? I mean, I think he just lost Andrew completely with the. You're talking about guns.
Both eyes open.
Right.
This is how we're.
Man, oh man.
You're
in the bottom 20%.
16. We have companies. 16 trillion is the private sector. The government's 4 trillion. Philanthropy's 400 billion. If we don't tap in the big gorilla, which is businesses, to help us address our social issues, bottom-us up, we're never going to solve it.
When we went to commercial, Dan, we were talking about what you've done recently with your employees. What did you go back and do?
Yeah. So, our mission at PayPal is to democratize access to financial services, which is a fancy way of saying that managing and moving money should be a right for every citizen, not just a privilege for the affluent. But then we thought to ourselves, if that's what we're talking about externally, are we really practicing that internally as well, inside our company? And, it's something like 2/3 of all Americans struggle to make ends meet at the end of the month.
Paycheck to paycheck.
Right? They live paycheck to paycheck. They've got a lot of financial anxiety. It impacts productivity at work. And so we did a study of all of our workers. And what we found is our entry-level positions, our hourly workers, even though we pay at or above market in every single market, about 60% were struggling to make ends meet each and every month. We thought to ourselves, well, in some way then, there's something wrong with the market because we're paying at or above, but still a lot of our workers are struggling to make ends meet. And we thought to ourselves, if the most important asset we have is our employees, then we need to do something about that. And so we did a very comprehensive program to look at what their net disposable income is and what we could do about that.
What did you do?
Okay, so first thing we did is we had to measure kind of really why was it that people were struggling. And what we found is if you look location by location, and you have to do this by geography, the net disposable income, how much people have after they do their basic essentials like
rent,
transportation, rent,
childcare,
medical expense, childcare, that kind of thing, for us was call it 5 to 6%. So people are living at the edge. And what we said is we need to do 4 things, and I'll talk about them very quickly. One was we needed to raise basic wages. Second thing is we wanted to look at benefit costs, because that's a huge, almost like a regressive tax. You pay the same for that as somebody who's an hourly worker. It costs them, obviously, as a percentage of their income, a lot more. So we cut the cost of benefits for those folks by an average of 58%. 58% reduction in the cost of benefits for that portion of the population. The other thing we did is we made every single employee inside PayPal a shareholder of the company. So we gave them all a one-time equity grant, and we made all of them eligible for equity going forward.
If the shares do well, they'll do well. Then you're back to shareholder value.
Joe, I'm going to talk about that because I really believe that.
But it'd be nice if they owned and then they participated in.
Why? Because our success as a company should be shared, and that means that every employee tries to do the right thing on every interaction with customers.
All right.
And I really believe that. And there's one other thing we did, Joe. Let me just get to this. Is we surrounded all of this with an educational program around financial health and financial wellness, because people are getting more money. They need to know how to manage it, how to save it, that kind of thing.
So,
Joe, you want to
just someone wrote it. Gerber Baby Food, father worked there, 1920s and 30s. Dan Gerber always said, take care of employees, treat them like family. They'll work hard. They'll make themselves happy customers. It's to my point, not a new idea, but a great idea. And I even wonder whether the brand name companies that are in our nomenclature that we always talk about, by definition, weren't they just all along? That's why we know who they are. That's why they've been so successful. That's why they're leaders in the world of doing what they do. Weren't they just from day one?
I won't comment on whether companies are just or not.
They're just becoming just now?
No, let me just point out this, Joe, and this is really important. 2/3 of Americans struggle to make ends meet at the end of the month. Right?
Got that?
2/3.
Okay.
So who employs all of those American workers? All of us who run big businesses. And I think it's incumbent upon us to look at, do they have enough net disposable income, a living wage, as other people talk about, to make ends meet? Because I think if you want to have passionate employees, they need to be financially secure.
But we have the highest standard of living in the world, and we want to keep the highest standard of living in the world and not become less competitive with every other country.
We're going to have data at 8:30, and I just want to ask you this. Business Roundtable comes out with their statement, which is very much in line with Just. However, the Treasury Secretary of the United States said that if he was part of the Business Roundtable, he would not have signed it.
And others.
And others. Steve Schwartzman, who's part of it, said he wouldn't have signed it, and didn't sign it. What do you make of that?
Well, I think we're in the three stages of truth. And right now, we're probably in that second phase where a lot of times it's rejected or opposed. But we're going to end up going back to what I think are old school values, right? Up until 1970, when Milton Friedman famously said the purpose of a corporation is to maximize profits, which was then canonized in 1997 by the Business Roundtable, that also says the primary purpose of a company is to serve its shareholders. That all changed in August when the Business Roundtable came out and pretty much adopted just stakeholder capitalism and said, no, we need to treat each stakeholder equally. And that's so important. I'm so optimistic about the future of this country because we're going to go back to old school values.
Gentlemen,
and that man's the living embodiment of it.
I'm going to give a moment to Dan Schulman to respond just on that last question that we talked about, Dan.
Yeah. I think it's really important to understand that these are not two incongruent statements, that by doing right for more constituencies, including your employees, and doing right by shareholders are two opposite thoughts. I actually think, and Joe, you said this, they go hand in hand. Yeah. If you do right by multiple constituencies, you will deliver more value for shareholders.
And if you do wrong, your shares aren't going up.
That's right.
Come back to hunt. It's
That's
all
exactly
karma.
Right. Yep.
Instant karma. It's going to get you.
We got to get back to Steve Lucien, but I did want to say you guys have a phone call where actually anybody who's watching our show right now can actually ask you questions directly on a conference call, and you can go to justcapital.com, I think, and register for that call. And it starts in 15 minutes.
So you guys have to run because we've got to get to this call, but thank you both.
Thank you for having us.
Thank you so much.